The Indonesian government is continuing its efforts to try and increase the attractiveness of oil and gas upstream investments in the country. The Energy and Mineral Resources Minister Arifin Tasrif said the government will prepare a number of incentives to attract investors to invest in Indonesia's oil and gas upstream industry.
The Indonesian government continues to make serious efforts in increasing the country's investment attractiveness. Currently, Indonesia is competing with other oil-source countries that offer more attractive incentives. During the Indonesia Petroleum Association and Exhibition Convention, or IPA Convex 2021, the Minister of Energy and Mineral Resources, Arifin Tasrif, said that the government is trying to offer a more attractive incentive package for investors that are eyeing Indonesia's oil sector.
Pemerintah juga terus berusaha meningkatkan investasi migas, antara lain melalui perbaikan terms dan conditions yang baru yang lebih menarik, melakukan perbaikan regulasi yang memudahkan untuk berinvestasi.
The government has set a target of producing 1 million barrels of oil per day and 12 billion standard cubic feet of gas per day by the year 2030. The president of Indonesian Petroleum Association, Gary Selby, said in order to achieve that target, an improvement of investment climate is needed.
To achieve these oil and gas production targets, it has been necessary to improve the fiscal terms being offered, thereby improving the investment climate in Indonesia. Improvements being introduced include improved tax facilities, fixing of DMO pricing up to 100% of the benchmark crude for cost recovery PSCs, and exemption or relief from branch profit tax, such as BPT exemption for reinvesting profits in Indonesia, or the application of BPT rates in line with the relevant international tax treaties.
A number of incentives have and are currently being prepared by the government to attract oil and gas upstream investments for existing contracts and new profit-sharing contracts, which are currently being auctioned. Incentives for existing contracts include a more aggressive profit sharing for oil and gas blocks with a profit-sharing contract scheme, production sharing contract, income tax incentives, PSC, with a PSC extension of a number of oil and gas blocks, and the possibility for oil and gas contractors in choosing the type of contract, either gross split or cost recovery. Meanwhile, incentives will be auctioned, which includes the flexibility in choosing the type of contract and a more aggressive profit-sharing plan.